Good morning, my online students. How are you all?
Assalamualaikum, ma'am.
Walaikum assalam wa rahmatullah. How are you, dear?
Fine, ma'am. Good morning, ma'am.
Good morning. Okay, now tell me, students, you are not comfortable for giving exam today? You are not comfortable? What about you, Samiha? Whatever? Okay, yes, dear. Whatever. No, tell me, please share your concerns, because if you are not going to share your concerns right now, it will be late. Okay. If you are not understanding the concepts in the class, even then you can tell me. If you need any extra help or support, you can tell me. If you are having any kind of query in understanding the language of the book, even then you can tell me. What's your problem? I feel that there is some problem. Maybe you are not feeling that interested in the starting papers of ACCA. Something is lacking. That's what I feel. So please share your concerns. Yes, Heather, we will start with you. Any concerns, dear? No concerns? You need more time? But okay. But are you revising the concepts regularly? The previous test? Okay, that's great. I had to return your test papers to you as well. They have been checked, but I have not returned to you. Okay, Samiha, what about you, dear? Are you understanding everything in the classroom? Are you struggling with something? What is that? Or aren't you feeling motivated? Is it something like that? You are not getting time?
I don't understand
Language of the book? Because it's a British one. And you know that now it's not a requirement, but before to some time it has been a requirement that before to starting ACCA you must have done IELTS. Because the language is tricky, I can understand that. But once you will be familiar with that, that theoretical language of British curriculum, you will start understanding that. It takes time. I can understand the fact. Even when I started this, I was struggling at that time. But with the passage of time, it becomes easier for you. Then you will not be struggling anymore. Okay. The next paper which you are going to study is F4. In F4, again, there are so many jargons, to be very honest. Okay. It's again a kind of a book like your F1. Again, you will be having a lot of jargons over there, and the book and the language which is included in the book is legal language as well. They are having so many law jargons related to the law also. So you are going to struggle, to be very honest. You have to struggle for that. What I used to do, I used to have a dictionary with me, because at my time, we were not allowed to use mobile phones. So I used to have dictionary with me, and it has helped me a lot, because it is going to increase your vocabulary. In the future also, in your communication skills, it is going to be an added advantage. So keep a dictionary with you, because it will be enhancing your reading skills. Whatever you are not, you are not finding the meaning of, you can get the help of the dictionary. Then regarding F1, F2, F3, you have to put a lot of struggle. After that, the things are going to become easier. Okay. And trust me, you people are getting more than enough time. More than enough time you are getting. As I told you, that usually in the colleges, within 1 month, they finish. Within 1 month, they finish. Even for me, when I passed my F1, F2, F3, within 2 months, I had finished all these 3 exams. Within first 2 months, finished these 3 exams. But at our times, the things have been different. F4 was not the computer-based exams like now. It has been a paper-based exam. And after every 6 months, the exams were happening at our times. Now, after every 3 months, the slots have been changed. In some of the colleges, even now, the students are not attempting the papers after every 3 months. They are taking 6 months. Those who are resitting in the same exams, they are taking 3 months to revise the concepts. Okay, so it's the best time, students. I do sit here up till 6 o'clock. If you do need extra time, if you are feeling that you need extra support, you are not getting the concepts rightly in the class, you can come anytime to my cabin. Okay, you're most welcome. But if you are not understanding anything in the book and you are just lingering it on so that we are going to ask the queries towards the end, then it will become difficult for you students. Even if I will be giving you 1 whole day or 2 whole day, I will be sitting with you so that you can prepare in front of me and you can ask your queries, whatever you are having during the preparation. Even then it will be difficult for you. Because in 1 day or in 2 days, obviously it's not possible to grasp all the concepts. Okay. So if you are struggling with anything, you are most welcome to ask me. Giving the exams is never meant to assess you people from my side. It's not like that these marks are going to be added in your final exams or these are going to be reported to the senior management or even to your parents. I'm not sending the report cards to your parents or to your guardians, okay? You're not in kindergarten, you are not small kids. But the thing is that it's only your self-assessment. You have to self-assess yourselves that where are you standing and how much more hard work do you need, okay? So the only purpose of the assessments is this, that you have to self-assess yourself so that you can see that which concepts you are clear about and which concepts you need to revise and which concepts are wrongly being, present in your mind. Sometimes we are thinking that the concept which we are having is right, but it's not. So the purpose of the assessment is only this. I will delay the exam. I will be taking it to the next week. No harm in that. But again, it means that we are just, staying away. We are just not stepping out of our comfort zone. So give the exams. It's okay. Even if you are not going to pass, it means that you need more hard work. It's okay. It's okay. People do fail exams as well. There are so many people. Some of these students do fail the exams of ACCA in the start. Some do fail in the end. It happens. One of my cousins, he is now 35 years. And last paper of ACCA he has cleared in the recent attempt. In the last attempt, he has cleared the last paper of ACCA. So it happens. It happens. It's a part of a life. And in Pakistan and India, maybe you have seen ACCA, the passing ratio of ACCA is still higher. But CA-ICAP of Pakistan or in India also, the CA, it's more difficult to pass because they are not passing the students. And maybe the students are becoming chartered accountants at the age of 40, at the age of 45. Everything has its own time. Okay. So don't you people become very fearful. It's okay. It's okay. It's just a part of a life. But do not run away from the exams. Whatever time is it, please try to attempt those. Okay. Please accept the challenges and please try to follow the deadlines. It's beneficial for you. So I just suggest you to give the test today. Even still, if you are not ready, it's okay. We can delay it. Yes, Hizar, now tell.
Not even the test because I don't know what they must have studied.
Okay.
So I know that I want people to give the test properly.
Okay.
I want to give the test.
Mm-hmm.
I'll give it a test next week.
That would be more better.
But I mean, it cannot be only my decision.
Yes.
So, there's no need to give the test today.
Okay. Okay, great. What about you, Samiha? Are you prepared for the test? Have you prepared for the test? Very good. What about you, Afaq? Tell me honestly, have you prepared? Have you solved the questions?
All of them, most of them.
Most of them you have solved. And Hizar, you have not solved any of them. Okay, you have not prepared. Okay. Mariam, what about you, dear? Have you prepared for the test? Or have you memorized all the answers? Mariam has this quality, she memorizes. And most of you I have seen in business and technology also. It's a good thing actually. Yes, Mariam, are you prepared for the test, dear?
Yes, ma'am. I prepare a little bit.
Very good, excellent. Rabia and Aisha?
Yes, ma'am. Little bit practice.
Good marks.
Very good. No, Rabia and Aisha are going to join us in the next week because in the online sessions, obviously, I'm not able to see that what students are doing sitting at their home. So I have requested them to join the physical classes so that we can, towards the end, we can prepare more for the test. Okay, now students, what we can do, we are going to have a test because as you can see, all of the other students are ready. Okay, sir. But what I can do for you, in the next week, you can again give your test. Okay, I will be giving you the test once again, so that once you are going to be prepared, we are going to have the test. Okay, anyhow, students, as you do know, I have not sent the slides of FA to you for the last week because our lecture has not been completed and we had to go for that event. So in our previous lecture, we had finished the chapter of provisions. Provisions is IS 37. We had prepared for that. And we had started our next chapter, that is capital structure and finance cost. Now, as far as international financial reporting standards are concerned, there is no separate accounting standard being set for capital structure and finance cost. Okay. So standards do give us the general know-how about the capital structure and the finance cost, but there is no separate standard which particularly deals with capital structures and the finance costs. In this chapter, we do have few accounting entries which we need to understand, but more than that, there are some theoretical, concrete concepts about which you need to be cleared about, which we had discussed also in our last lecture. We had already started this chapter. We had started with the discussion that in the limited liability companies, there are two sources of finance, which you must be knowing. What are the two sources of finance for limited liability companies? Debt and equity. Debt and equity are the two sources of capital for any limited liability company. Either they can raise their finance by issuing the shares to the general public, or they can raise the finance by issuing the loan notes or taking the loans from any third parties. So debt and equity are the two major sources of finance for limited liability companies. Under limited liability companies, you must be knowing that there are two broader types: private limited liability companies and public limited liability companies. As far as private limited liability companies are concerned, they are not allowed to issue the shares to the general public. Why I'm telling you this point? Because sometimes in the exam questions, they do ask you this. Private limited companies are not allowed to issue their shares to the general public, whereas public limited liability companies are allowed to issue the shares to the general public in order to raise the finance. So we had started our discussion by considering the fact that the two broader types of the capital for limited liability companies are debt and equity. Now, under debt and equity, we should be knowing the particular characteristics of both of these. What are the different characteristics of a capital which makes it a debt, and what are the particular characteristics of the capital which makes it equity? Both are capital. Some students do get themselves confused. They consider that only the equity is the capital. Only the capital which they are getting by issuing shares is capital. But debt is also a form of a capital. It's a form of a finance. The other name to the finance which we give is capital. Which things, which characteristics, which qualities does make a finance a debt finance? Debt has particular characteristics attached to it. Number one characteristic is that whatever principal amount is being received as a debt has to be returned at some particular date. It is mandatory to be paid. The principal sum, the main amount of the loan which has been taken as a debt, has to be repaid ultimately. The second characteristic is that the return on the debt which we have to give is known as an interest. The return by using the debt finance is known as interest. And interest is also mandatory to be paid. Even if the company is earning profit or running into losses, the interest has to be paid at any cost. There is no stepping back against that. Interest which is paid as a return on the debt financing is tax deductible. The interest which we are paying on the debt financing is tax deductible. Why is it tax deductible? Because when we are preparing statement of profit or loss, interest does come in our statement of profit or loss. Finance costs, interest reduces our profit after tax, and thus it reduces our tax liability also. That is why interest is tax deductible. If you are going to find any of these characteristics in the capital which is being raised by the organization, you are going to call it as a debt. If you find that the capital which has been raised is mandatory to be repaid, or the capital which is being raised, the amount of return which is being paid on that is called as an interest, or you might find that the amount which you are taking as the capital on that, the interest which you are paying is tax deductible, you are going to call that particular source of capital as debt financing. In your life, in further of your life as an accountant, you are not going to be told these characteristics in detail. You have to establish by yourself that which type of the capital which is in front of you is debt or which is equity. You have to establish it by yourself. And you are going to establish by looking at the characteristics of that particular source of finance. As far as equity capital is concerned, which we normally call as capital, what are the characteristics of the equity? That the amount of the principal which is raised by issuing shares is not going to be repaid at a future date. The amount which the company collects by issuing shares is not going to be repaid. The second characteristic is that the return which is being paid on the equity financing is known as dividend. Dividend is going to be paid out of the retained earnings. Again, this is the important point. In exams, sometimes they ask, dividend is repaid, dividend is paid to the shareholders out of the retained earnings. That is why retained earnings are also known as distributable reserves. Other reserves are not going to be used in order to pay the dividend. Dividend never comes in the statement of profit or loss. That is why it is not tax deductible. Now, in the organizations, there are debt financings, there are equity financings, and there are some kinds of the financings which are having the characteristics of both debt and equity. If the organization is issuing ordinary shares is an equity financing. The characteristics of ordinary shares are those of the equity financing. If the company is issuing loan notes, they are debt financing because they are having the characteristics of debts in them. On the other hand, if the company is issuing preference shares, they are having the characteristics of both debt and equity financing. Under preference shares, we do have two kinds of preference shares, majorly redeemable preference shares and irredeemable preference shares. Redeemable preference shares are those which have to be redeemed, which have to be returned after a specific period of time. What is the meaning of that? The principal amount which the company has raised by issuing redeemable preference shares has to be returned. And the amount which has to be paid on the redeemable preference shares is again mandatory to be paid. Now, this kind of the preference share, redeemable preference share, even if its name is share, because it is having the characteristics of debt in it, that is why we are going to consider it and account it as a debt in our books of accounts. This is the concept which is known as substance over form. Even if the legal form is shares, we are going to prioritize as per the legal form, as per the economic substance. Economic substance is that of the debt. That is why redeemable preference shares are shown under the head of liabilities in our SOFP. And on the other hand, the dividend which is paid on the redeemable preference shares is known as interest. And that is going to be shown in our SOPL. It will be deductible as the finance cost in our SOP. On the other hand, we do have second important category of the preference shares, that is irredeemable preference shares. Irredeemable preference shares are those which are not going to be returned by the limited liability company in the future. The principal amount which the company has gained by issuing irredeemable preference shares is never going to be returned back. And the dividend which has to be paid on the irredeemable preference shares is not going to be promised to the shareholders, because irredeemable preference shares are having the characteristics of equity. We are going to account them for as the normal equity. We are going to write them under the head of equity in our SOFP. The dividend which we are going to pay to them are going to be shown only in the statement of changes in equity, not in any other place. This is what we had discussed in our last lecture. मरियम, आपके लिए मैं एक दफा क्विकली रिवाइज कर रही हूँ कॉन्सेप्ट्स को, ध्यान से सुनो. लिमिटेड लाइबिलिटी कंपनीज के पास टू मेजर सोर्सेज ऑफ फाइनेंस हैं, डेट और इक्विटी के. डेट की नॉर्मल कैरेक्टरिस्टिक्स ये हैं कि प्रिंसिपल अमाउंट जो कि डेट के लिए हम लोग ले रहे होते हैं उसको रिटर्न करना होता है लाजमी तौर पर, जो कि प्रॉमिस्ड फ्यूचर डेट होती है उस पर. और जो रिटर्न देते हैं हम लोग डेट के ऊपर उसको कहते हैं हम लोग इंटरेस्ट. इंटरेस्ट भी लाजमी है कंपनी के लिए पे करना, चाहे वो प्रॉफिट अर्न कर रही है या फिर वो लॉस ले रही है. इसके अलावा डेट के ऊपर जो इंटरेस्ट पे किया जाता है वो टैक्स डिडक्टेबल है. टैक्स डिडक्टेबल का मतलब ये है कि इंटरेस्ट को हम लोग स्टेटमेंट ऑफ प्रॉफिट और लॉस के अंदर लिखेंगे. जितना ज्यादा इंटरेस्ट होगा प्रॉफिट आफ्टर टैक्स उतना ही कम होगा और उतनी ही कम हमारी टैक्स लाइबिलिटी होगी. इक्विटी फाइनेंसिंग के अंदर कैरेक्टरिस्टिक्स ये हैं कि जो हम लोग शेयर्स इशू करके अमाउंट हासिल करते हैं वो मैंडेटरी नहीं है, वो लाजमी नहीं है पे करना, वापस करना लाजमी नहीं है, बल्कि वापस होती ही नहीं है. और इक्विटी के ऊपर जो रिटर्न दिया जाता है वो डिविडेंड कहलाता है. डिविडेंड हमारा स्टेटमेंट ऑफ प्रॉफिट और लॉस में नहीं आता, इसलिए वो टैक्स डिडक्टेबल नहीं है. डिविडेंड सिर्फ और सिर्फ स्टेटमेंट ऑफ चेंजेस इन इक्विटी के अंदर शो किया जाता है. शेयर होल्डर्स का राइट है कंपनी के अंदर रेजिड्यूअल एसेट्स के ऊपर. Okay, this is the definition of equity which is provided by IS 1. Conceptual framework also provides us the definition of the equity in the same manner. Equity is the residual interest in the company. It means that whatever is residue in the company, whatever is left over in the company after deducting liabilities is known as equity. This again comes in so many past papers. I have seen this definition. Equity is a residual interest in the assets of in the company. Assets minus liabilities is equal to equity. This is the definition of equity. तो ये equity की characteristics हैं मरियम. अब कंपनी के अंदर कैपिटल स्ट्रक्चर देखा जाए तो कुछ कैपिटल के अंदर हम लोग देखते हैं डेट फाइनेंसिंग की कैरेक्टरिस्टिक्स मौजूद हैं, कुछ में इक्विटी की और कुछ में डेट और इक्विटी दोनों की. ऑर्डिनरी शेयर कैपिटल एक ऐसा कैपिटल की फॉर्म है जिसके अंदर इक्विटी की कैरेक्टरिस्टिक्स मौजूद हैं. ऑर्डिनरी शेयर्स पर जो पैसे लिए जाते हैं वो वापस नहीं किए जाते. डिविडेंड जो इन पर पे करना है वो लाजमी नहीं है पे करना. अगर कंपनी के डायरेक्टर्स चाहते हैं पे करें तो वो करेंगे पे, अगर नहीं चाहते तो वो नहीं करेंगे. इवन अगर कंपनी प्रॉफिट अर्न कर रही है तब भी नहीं. ऑर्डिनरी शेयर होल्डर्स को प्रेफरेंस नहीं दी जाएगी डिविडेंड के अंदर. पहले बारी आएगी प्रेफरेंस शेयर्स की, उसके बाद बारी आएगी ऑर्डिनरी शेयर होल्डर्स की. और प्रेफरेंस शेयर होल्डर से पहले बारी आएगी लाइबिलिटीज की. पहले लाइबिलिटीज पे करनी है, फिर पैसे बचेंगे तो प्रेफरेंस शेयर्स को, फिर पैसे बचेंगे तो ऑर्डिनरी शेयर होल्डर्स को. कंपनी की एक सोर्स ऑफ कैपिटल है लॉन नोट्स. लॉन नोट्स को इशू करके कंपनी डेट्स जो कि है वो रेज कर सकती है, और लॉन नोट्स की कैरेक्टरिस्टिक्स डेट फाइनेंसिंग वाली हैं. इसके अंदर जो भी अमाउंट कंपनी लेगी उसकी प्रिंसिपल अमाउंट पे करना, वापस करना लाजमी है. फाइनेंस कॉस्ट जो इसके ऊपर पे होगी एज अ रिटर्न टू डेट फाइनेंसिंग इज गोइंग टू बी शोन इन योर स्टेटमेंट ऑफ प्रॉफिट और लॉस. दैट इज व्हाई इट इज टैक्स डिडक्टेबल. फिर बारी आती है प्रेफरेंस शेयर्स की. प्रेफरेंस शेयर्स के अंदर दो कैटेगरीज हैं, रिडीमेबल प्रेफरेंस शेयर्स और इररिडीमेबल प्रेफरेंस शेयर्स. रिडीमेबल प्रेफरेंस शेयर्स कहलाते हैं डेट फाइनेंसिंग, क्योंकि इनकी कैरेक्टरिस्टिक्स डेट फाइनेंसिंग से मिलती जुलती हैं। जो अमाउंट हम लोग रिडीमेबल प्रेफरेंस शेयर्स इशू करके इकट्ठी करेंगे वो वापस करनी होगी हमें फ्यूचर प्रॉमिस्ड डेट पर, और जो अमाउंट हम लोग रिडीमेबल प्रेफरेंस शेयर्स की सर्विसिंग पर देंगे जो कि कहलाती है कॉस्ट ऑफ कैपिटल, रिटर्न जो हम लोग देंगे वो भी इंटरेस्ट कहलाएगा, क्योंकि वो लाजमी है पे करना कंपनी के लिए। और ये अमाउंट ऑफ डिविडेंड इंटरेस्ट के नाम से डिडक्ट होगी स्टेटमेंट ऑफ प्रॉफिट और लॉस के अंदर। स्टूडेंट, स्टेटमेंट ऑफ प्रॉफिट और लॉस के अंदर हम लोग ये शो करेंगे अमाउंट ऑफ डिविडेंड, लेकिन इंटरेस्ट के नाम से। ऑन द अदर हैंड द सेकंड कैटेगरी इज इरिडीमेबल प्रेफरेंस शेयर्स। इसके नाम से ही हमें पता चल रहा है कि इस प्रेफरेंस शेयर्स के ऊपर जो अमाउंट हम इकट्ठी करेंगे वो वापस नहीं की जाएगी शेयर होल्डर्स को, इसलिए इसकी कैरेक्टरिस्टिक्स इक्विटी फाइनेंसिंग वाली हैं। इनको हम लोग नॉर्मली ऑर्डिनरी शेयर्स के तरह से ही हम लोग शो करेंगे और अकाउंट फॉर करेंगे। जो डिविडेंड हम इन पे करेंगे वो सिर्फ और सिर्फ स्टेटमेंट ऑफ चेंजेस इन इक्विटी में आएगा और कहीं पर नहीं आएगा। Miriam, I hope that you are clear now.
Yes, ma'am. Thank you.
You're welcome. Now, my dear students, there are specific terminologies regarding ordinary share capital which you need to be clear about. The first terminology which you are going to see in this chapter is nominal or par value. Nominal or par value is the face value of the shares. When you do purchase a share, on the face of a share, on that particular document of the share, the amount which is written is known as nominal or par value. This is the minimum amount which the company can get by issuing shares. And normally it is $100. It can be any amount, but it normally is $100. It is the minimum amount which the shareholders must have to give in order to become the shareholders of the company. Nominal or par value is also known as the face value of the shares. Then we do have issue price. Issue price of the shares is the price at which the shares are actually issued to the general public. This can be the par value or this can be above the nominal or par value of the shares. So the issue price is the price at which the shares are actually issued to the general public. Say for example, the par value or the face value of the share is $100. And I am the person who is issuing the shares in order to get the capital for the company. If I have to issue the shares, I cannot issue the shares lesser than this amount. This is the minimum amount at which the shares have to be issued to the general public. If, say, for example, I issue the shares at 120, it means that I am taking the price over and above than the nominal or par value of the shares. This is the price at which I have actually issued the shares to the general public. So the price at which we are actually issuing the shares to the general public is known as issue price. So what I mean to clear over here that we can take the price above than the par value, but not lesser than this. Issue price can be the same as par value or higher than that, but not lesser than that. Before some time, the shares used to be issued at discount as well, at the price lesser than the par value, but now it is not allowed in any of the countries of the world. We can either issue the shares at the par value or above than that. Then we have market value. Market value of the shares is the price at which the shares are traded in the stock exchange. If you go to the stock exchange, the price at which you are able to purchase the shares or the price at which you are able to sell the shares is known as market value. Market value of the shares keeps on fluctuating as per the performance of the company, as per the repute of the company. If the company's repute or goodwill is good, the market value is going to increase. If it's bad, it is going to decrease. So the market value of the shares is the price at which the shares are traded in the stock exchange. Then we have issued share capital. Issued share capital is also known as nominal share capital. It is the amount which is going to be gained by multiplying the number of shares issued with the par value of the shares, not the issue price. Issued share capital is the price which we are going to get by multiplying the number of shares issued multiplied by the nominal value of the shares. It is the amount at which the dividend is also calculated. Dividend is calculated on the issued share capital. This is the amount which you are going to find just below to your head of equity, the first line item in your statement of financial position. This is also known as nominal share capital. This is the amount of the share capital which is issued to the general public. But we are not going to multiply number of shares with the issue price in order to get this share capital. Instead, we are going to multiply the number of issued shares with their nominal value in order to get this value. So let me just write it over here. That is shares issued multiplied by par value. Then we have called up capital. My dear students, called up capital is the amount which has been actually called up by the company from the shareholders. That is basically the amount which is actually going to be got by multiplying issue price with the number of issued shares. This is the price which is actually called up from the different persons in order to become the shareholders of the company. This can be the same as the par value or above than the par value. Maybe the issue price is higher than the par value. Then we are going to multiply the issue price with the number of shares issued in order to calculate called up capital. Got it? So called up capital can be the same as issued share capital or above than the issued share capital. Then we have paid up capital. Paid up capital is the amount which is actually being paid up by the shareholders in order to become the shareholders of the company. It can be lesser than the total issue price. Sometimes the organizations to call the share capital, but the capital which is being given by the shareholders is lesser than the amount which is being called up. And the remaining amount is maybe promised to be given at the future date. So out of the total called up capital, the amount which is being actually paid up by the shareholders is known as paid up capital. Now, my dear students, on the face of the statement of financial position, called up capital, paid up capital is not being shown. The amount which is being shown is issued share capital. This is the one which is going to be shown. But these have to be known to you for the theoretical reasons only. In none of the places in your financial statements you are going to find these. These are just theoretical concepts. You are going to write only the issued share capital under the head of equity in your SOFP. Is everyone clear up till here? So what is the par value? It is the face value of the share. Issue price is the price at which the shares are actually issued. Market value is the price at which the shares are traded in the stock exchange. Issued share capital is number of shares issued multiplied by the par value of the shares. Called up capital is the amount of capital which is called up by the members in order to become the shareholders of the company. That is number of shares issued multiplied by issue price. Paid up capital is the actual amount of the capital which is being paid up by the shareholders in order to become the shareholders of the company. Some amount they can pay in advance and some amount they can promise to pay in the future. I hope that all of you are clear about these terminologies. मरियम, जब एक डिविडेंड कैलकुलेट करना होगा वो नॉमिनल वैल्यू पर कैलकुलेट होगा, ठीक है? नॉमिनल वैल्यू मिनिमम अमाउंट है जिसके ऊपर शेयर्स इशू किए जा सकते हैं, इससे कम पर शेयर्स इशू नहीं किए जा सकते। इशू प्राइस या तो पार वैल्यू हो सकती है या फिर पार वैल्यू से ऊपर भी ये जा सकती है। मार्केट वैल्यू वो वैल्यू है जिस पर शेयर्स परचेज और सेल हो सकते हैं स्टॉक एक्सचेंज के अंदर। ये चेंज होती रहती है कंपनी की परफॉर्मेंस के मुताबिक। इशूड शेयर कैपिटल वो अमाउंट ऑफ कैपिटल है जो कि एक्चुअली इशू किया गया है शेयर होल्डर्स को। नंबर ऑफ शेयर्स इशूड मल्टीप्लाई द नॉमिनल वैल्यू इज नॉन एज इशूड शेयर कैपिटल। कॉल्ड अप शेयर कैपिटल वो अमाउंट ऑफ कैपिटल है जो कि एक्चुअली मुगवाई गई है शेयर होल्डर से, जो कि कॉल अप की गई है शेयर होल्डर से। और पेड अप कैपिटल कॉल्ड अप कैपिटल का वो हिस्सा है जो कि एक्चुअली पे की गई है शेयर होल्डर्स की तरफ से। Now, students, we are going to discuss about the accounting treatment of the issuance of shares. When we are going to actually issue the shares to the general public, what accounting entries we are going to pass in regards to that? I have included these accounting entries in your notes as well. You must be knowing that whenever we are issuing the shares to the general public, what is an accounting entry? Debit will be cash or bank account, and credit will be share capital account. Why do we debit cash? Because asset is coming in the organization. Asset is increasing in the organization. Increase in asset, debit. Why do we credit share capital? Because capital is increasing in the organization. Increase in capital, increase in equity is going to be credit. Debit cash, credit share capital. Clear? This is the normal accounting entry for issuing the shares to the general public. Debit cash, credit share capital. This accounting entry is normally passed when you are issuing the shares at par. At par. We can issue the shares at par or at a price which is over and above than the par value. If you are issuing the shares at par, pass the simple accounting entry. Debit cash, credit share capital. But when you are issuing the shares at a price which is above than the par value, more than the par value, it means that you are getting the amount which is higher than the nominal value of the shares. In that case, the accounting entry which you are going to pass is debit cash, credit share capital. Together with share capital, one more account is going to be credited, which is known as share premium. It means that the price which is being collected by the organization over and above the par value is known as share premium. I repeat, the price which is collected by the company over and above the par value is known as share premium. Share premium is a kind of reserve for the company. Under the head of equity, my dear students, we do account for ordinary share capital and all of the reserves of the company. Which two things come under the head of equity? Ordinary share capital and all the reserves of the company. One of the reserves is share premium. Do you remember about revaluation surplus? Revaluation surplus under IAS 16, that is the other kind of the reserve. Third kind of the reserve is retained earning. So all these reserves together with the ordinary share capital has to be shown under the head of equity. Now, what accounting entry we have to pass when we are issuing the shares at a price over and above than the par value? Debit cash, credit share capital, and credit share premium. What is the theory behind it? If, say, for example, we are issuing the shares at $100, okay, this is the par value of the share. We are going to pass that simple accounting entry, debit cash, credit share capital. My dear students, in front of share capital, every time you are going to write the amount, that is number of shares issued multiplied by the nominal value of the shares. Which amount do you have to write in front of share capital? Amount, nominal value. Which amount you have to write? Nominal value of the shares multiplied by the number of shares issued. In front of share capital, every time you have to write this amount. Because you are getting the same amount as the par value of the shares. That is why you are going to pass the simple accounting entry. Debit cash, credit share capital. In front of share capital, nominal value of the shares multiplied by the number of shares. Your debit and credit are going to be equal. But when you are issuing the shares at a price over and above than the par value, say for example at 120 you are issuing the shares, it means that the cash which you are receiving is now 120 per share. You are going to credit share capital. In front of share capital, what you have to write? The par value only, nominal value. In front of share capital, you are going to write only 100. It means that your credit is lesser than the debit side. The remaining credit is share premium, which is the price over and above than the par value. The price over and above than the par value is which one? 120 minus 100, 20. So what is share premium? the price over and above then the par value is known as share premium. So when the company is issuing the shares at a price over and above higher than the par value of the shares, we call it the shares issue at premium. Clear to everyone? In front of share capital, every time, which amount do we have to write? The nominal value. Every time. Over here also, at the share premium, when we have issued in front of share capital, nominal value is going to be written. In front of share premium, if the price is over and above, then the par value is being taken, the excess is going to be written over here. And in front of cash, issue price is going to be written. At a price that we are issuing the shares, we have to write. Look, they have written. So let's read it quickly. If a company did issue shares at their nominal value, the double entry to record this raising of finance would be debit cash, credit share capital. In reality, companies generally issue shares at a share above their nominal value. This is referred to as issuing shares at a premium. The double entry to record such an issue is debit cash, credit share capital, credit share premium. Both share capital and share premium accounts are shown on the statement of financial position within equity section. Students, in your SOFP, under the head of equity, what you are going to find? It's about limited liability companies. What you are going to find? Ordinary share capital, that is issued share capital. Number of shares issued multiplied by nominal value of the shares. At which price are you going to calculate dividend? At this price, the dividend is going to be calculated. This is important. I am repeating because these concepts are going to be tested in the exam. Ordinary share capital, and then all of the reserves are shown under the head of equity. We do start with share premium. We do write revaluation, surplus, and in the last, we do write retained earnings. From the reserves, company distribute its dividends. The only distributable reserve is retained earning. The type of the reserve which can be distributed to the shareholders during the life of the company is retained earnings. Okay, this is also known as distributable reserve. This is what we are going to show under the head of equity. I hope everyone is clear. So either the company can issue the shares at par, or it can issue the shares at a price over and above than its par value, that is premium. Mariam, are you clear? कंपनी या तो शेयर्स इशू कर सकती है पार वैल्यू पर या फिर प्रीमियम पर। अगर कंपनी शेयर्स इशू कर रही है पार पर, मतलब उसकी फेस वैल्यू के ऊपर, तो अकाउंटिंग एंट्री सिंपल रहेगी, डेबिट कैश, क्रेडिट शेयर कैपिटल। शेयर कैपिटल के सामने हम लोग हमेशा नॉमिनल वैल्यू लिखेंगे। अगर कंपनी इशू शेयर कर रही है एट अ प्रीमियम, अकाउंटिंग एंट्री बन जाएगी डेबिट कैश, क्रेडिट शेयर कैपिटल, क्रेडिट शेयर प्रीमियम। शेयर कैपिटल के सामने हमेशा नॉमिनल वैल्यू लिखी जाएगी, शेयर प्रीमियम के सामने वो प्राइस जो कि अबव, ओवर एंड अबव है पार वैल्यू से, वो लिखी जाएगी, और कैश के आगे हमेशा इशू प्राइस लिखी जाएगी। दोनों शेयर कैपिटल और शेयर प्रीमियम हम लोग इक्विटी सेक्शन के अंदर शो करते हैं। Now students, here is understanding number 1. Show this transaction using ledger accounts. Bourbon Company issued 200,000 25-cent shares at a price of $1.75 each. Students, first let me tell you the mistake which the students do. Students simply do read the question and they do consider that this is the amount, value. This is the price. This is not the price, this is the number of shares. These are the number of shares. And the normal thing about the number of shares is that no unit of currency is being written with them. Okay, so these are the number of shares which are being issued. So please avoid this mistake. They say Bourbon Company issued 200,000 25-cent shares. Number of shares being issued are 200,000. Number of shares issued. 25 cents. Normally we have to convert it into dollar. So how many dollars are going to be in 25 cents? Simply 25 divided by 100. How many dollars will be there? 0.25. What is cent? Like we do have paisa in 1 rupee. In 1 rupee, 100 paisas. In $1, 100 cents. Okay? So because we have to convert it into dollars, 25C means 25 cents. 25 divided by 100, $0.25. So the price at which the shares are issued is 25 cents. Is it? No. Very good. This is the par value. The value which will be given with the board shares is known as par value. Look, they are defining verbal company issued 200,000 25 cent shares. It means that this is the face value of the shares at a price of 1.75 each. The issue price is this. At which price it has been issued? This one is 1.75. This is issue price. This one is par value. Par value is also known as nominal value or face value of the shares. Okay. Now, what accounting entry we are going to pass? As we can see that the shares are issued at a price over and above than the nominal value of the shares. So our accounting entry will become debit cash, cash account, credit, share capital account, and credit share premium account. In front of cash account, we have to write the issue price. What is the issue price, students? $1.75 multiplied by number of shares being issued, 200,000. This price we have to write in front of cash account. In front of share capital account, which price do we have to write every time? In front of share capital? In front of share capital, every time we have to write the nominal value. Par value of the shares have to be written. So what is the par value of the shares? 25 cents, $0.25. $0.25 multiplied by the number of shares, that is 200,000. In front of share premium, the price which is over and above the par value has to be written. The price which we are taking over and above the par value is how much? 1.75 minus 0.25, it is $1.5. So $1.5 multiplied by 200,000. Obviously, these workings you are not going to show in front of the journal entries, only the calculated amounts you are going to show. Okay, now you can calculate and your debit and credit must be equal to each other. Mariam? Students, I am sending this picture in the WhatsApp group so that immediately you can see.
Okay, ma'am. Thank you.
Okay, ma'am. Thank you.
You are welcome. Samiha, clear, dear? Yes, dear. Everyone cleared?
Yes.
So now, like this, we are going to do the questions regarding shares being issued at premium.
Ma'am, why
Yes,
we
please.
divided 25 by 100?
Because Mariam, देखो, कौन पूछ रहा है? आयशा और मरियम?
Mariam.
Okay, मरियम, जिस तरह से एक 1 रुपी के अंदर 100 पैसास होते हैं ना, इस तरह $1 के अंदर 100 सेंट्स होते हैं. ठीक है? हमें सेंट्स को डॉलर के अंदर कन्वर्ट करना होता है, क्योंकि नॉर्मली हमारी कैलकुलेशंस जो दी गई होती है वो डॉलर्स में दी गई होती हैं. ऐसे आप क्वेश्चन में देखो कि डॉलर दिया गया है, इशू प्राइस डॉलर में दी गई है, तो हमने 25 सेंट्स जो उसकी पार वैल्यू है उसको भी डॉलर में कन्वर्ट करने के लिए उसको डिवाइड किया है 100 से.
Okay,
25 cents divided by 100 will become the amount in dollars, $0.25. Now, students, one kind of the share issue which we are going to study now is a right issue. Right issue is a kind of a share issue which is being made to the existing shareholders. Those shareholders who have already taken the shares of the company, the right issue can be made to those existing shareholders. right issue is going to be made to the existing shareholders in the proportion of their existing shareholdings at a price lesser than the market value of the shares. Three properties of the right issues are that they are going to be issued to the existing shareholders. जो shareholders पहले से कंपनी के shares ले चुके हैं उन्हें इशू किया जाएगा as per their existing shareholdings. उनकी जो existing shareholdings हैं उसकी proportion में दिया जाएगा at a price lesser than the market value of the shares. उस price पर ये issue किया जाएगा जो कि lesser than है market value of the shares. Right issue is a kind of a share issue which is being issued to the existing shareholders as per the proportion of their existing shareholdings at a price which is lesser than the market value of the shares. When the companies are trying to save their issuing costs, obviously when the shares are going to be issued, there are certain administration costs attached to that issue. When the companies do not want to lose that amount, then they have to go for the right issue. They do want to issue the shares to their existing shareholders who are already knowing about the company. And these shares are going to be issued to the existing shareholders in the proportion of their existing shareholdings. They are going to be issued as per the existing shareholdings of the existing shareholders. Say, for example, those shareholders who are already having 2 shares of the company, they will be getting 4 right issues. For 2 shares, 4 right issues are being given. It means that as per the existing shareholdings, the right issue is being made. And what is the attraction for the shareholders to get these right issues? If they are going to take the shares from the market, they will be getting them for higher price. But if they are going to get it from the company as a right issue, they will be getting it for lesser price. Because the right issues are issued at the price which is lesser than the market value of the shares. So the 3 properties of the right issue are that these are made to the existing shareholders in the proportion of their existing shareholdings, and the price which is going to be offered is lesser than the market value of the shares. Students, right issue can be made at a par or at a premium. The accounting entries are going to remain the same. If it is being issued at par, debit cash, credit share capital. If it is being issued at premium, debit cash, credit share capital, credit share premium. Accounting entries are going to remain the same. Let's read what your book says about right issue. पहले मैं मरियम को बता दूं. मरियम, राइट इशू एक ऐसी शेयर इशू की किस्म है जो कि एग्जिस्टिंग शेयर होल्डर्स को ही इशू की जाएगी. वो शेयर होल्डर्स जो पहले से कंपनी के शेयर होल्डर्स हैं उन्हें इशू की जाएगी एट अ प्राइस which is lesser than the market value. प्राइस इन शेयर्स की मार्केट वैल्यू से कम होगी और ये शेयर्स उस प्रोपोर्शन में इशू किए जाएंगे जो कि प्रोपोर्शन ऑलरेडी शेयर होल्डर्स के पास मौजूद है. ठीक है? Your book says a right issue is an offer of new shares to existing shareholders in proportion to their existing shareholdings at a stated price, normally below market values. The advantages are a right issue is the cheapest way for the company to raise finance through the issuing of the further shares. Students, cost of issuing the shares is always higher than the debt financing. But as compared to the ordinary shares, the price of issuing the right shares is lesser because administration costs are not involved. A right issue to the existing shareholders has a greater chance of success compared with the shares issued to the public. Why? Because the existing shareholders are already convinced by the company. They already know about the company. What are the disadvantages? A right issue is more expensive than issuing debt. Any kind of share issue is expensive than debt financing. It may not be successful in raising the finance required. It can fail also if your existing shareholders are not going to purchase your right issues. Obviously, the scheme can fail as well. A right issue is accounted for in the same way as normal share issue and therefore has exactly the same impact on the statement of financial position as an issue at full price. So same accounting treatment is going to be done in the case of the right issue also. Now we are going to do this understanding, students, regarding right issue. The requirement of the question is, what accounting entries are required in 2004 and 2005? For 2 years, you are required to provide the accounting entries. Illustrate the relevant section of the statement of financial position at year end 2005. Together with that, you have to show that how are you going to show this treatment in your SOFP for 2005, not for both years. Let's read the question. Upon incorporation means when the company has come into existence, when the company is incorporated. Upon incorporation in 2004, JD Company, a limited liability company, issued 1,050 shares at a nominal value. Afa, please tell how many shares have been issued? Very good. Hizar, please tell what is the nominal value of the shares? Very good. Samiha, please tell what is the issue price of the shares? 0 point? No. They are telling us issued at nominal value. So over here, the issue value is the same as the par value. So in 2004, when this thing has happened, what accounting entry we must have passed? Debit, cash. In front of cash, what are we going to write? Issue price. Issue price is the same as the nominal value. 50 cents means $0.5. Okay. Issue price is the same as the nominal value. So $0.5 multiplied by the number of shares, 1,000. Debit cash, credit share capital, because this is being done at par only. So in front of share capital, again we are going to write the nominal value 0.5 multiplied by 1,000. This is the accounting entry which we are going to do in 2004 for this particular transaction. Cleared? Samiha, cleared? My online students, what accounting entry we are going to pass for the first statement when the shares are being issued at par, at nominal value, debit cash, credit share capital. What amount are we going to write, students? Can you calculate it for me? 1,000 multiplied by 0.5, 500. 500? Is it 500 or 2,000? 500? Okay, 50%. Okay, now my dear students, needing further funds in 2005, it made a right issue of 145 at 0.75. Now, this is the new concept for you. Now, needing further funds in 2005, it made a right issue of 145 at $0.75. $0.75 is above than the par value, is it? It means that the second type of the accounting entry is going to be passed. What is the second type of an accounting entry? For premium, debit cash, credit, share capital, credit, share, premium account. Now, which amounts shall we have to write? In order to calculate the amounts, we have to see the number of shares which are being issued for this right issue. They are telling it made a right issue of 145. 145 means that existing shares were 1,000. For every one existing share, 5 shares are being, for every 5 existing shares, one right issue is being made. 145, for every existing 5 shares, one issue is being made. When they say 145, divide with 5, multiply with 1. Okay, 145. They can say you 246 as well. 246 means 2 divided by 6. 3 for 10 also, 3 divided by 10. For every 5 existing shares, one right issue is being made. Existing shares were 1,000. So 145, the number of right issue will be how much? Number of right issue will be how much? 200 shares have been issued. Once you have calculated the number of shares, now you can write the amounts. In front of cash, you are going to write the issue price. Issue price is how much, Sabiha? Now here the issue price is 0.75. 0.75 multiplied by the number of shares issued, 200. In front of share capital of how much amount are we going to write? Very good. In front of share capital, every time we have to write the nominal value. The nominal value is 0.5 multiplied by the number of shares, 200. In front of share premium, the price over and above than the share, the nominal value, that is 0.25 now, multiplied by 200. These amounts are going to be written. Can you please calculate, students? 0.75 multiplied by 200? 175? 150? Sure? Okay. 150 in front of share capital, 100 and this 50. Okay? This is going to be accounting entry. And they also are telling us this offer was fully taken up. So these are going to be the accounting entries in 2004 and 2005. Now, for SOFP, in SOFP, how are we going to illustrate? Under the head of equity, we are going to write the share capital. How much share capital are we going to write under the head of equity? How many shares have been issued in total? In total, you have to see. Very good. In SOFP, the total, what the company has attained from the start up till end, at the particular time, it has to be shown. So total number of shares which are being issued up till 2005 are 1200. In front of share capital, how much amount we have to write? 1200 shares multiplied by 0.5. Very good. Nominal value we have to write. How much it will become then? 600. Is it? 600 we are going to write. And then we are going to write a reserve as well. Share premium. Share premium is how much? 50. Only this share premium is there. We have to write the share premium in collection, but there has not been any share premium before. If there would have been share premium before as well, in collection we must have written. My online students, I am sending you the picture so that you can just have a look at it.
Thank you, ma'am.
You are welcome, dear. Okay, now this first picture is number of the right issues which we have calculated. And the second one is regarding accounting entries. Students, may I erase it? Now, students, another kind of the share issue is bonus issue. The first characteristic of the bonus issue is the same like right issue. Bonus issue is also issued to the existing shareholders. The second characteristic of the bonus issue is again the same as the right issue. These are going to be issued as per their existing shareholdings. The third characteristic is not the same as the right issue. They are not going to be issued at a price lesser than the par, lesser than the market value. Instead, bonus shares issues are going to be issued without taking any amount from the shareholders. For free, they are going to be issued. As its name is suggesting, it's a bonus for the existing shareholders. Bonus issue is the kind of the share issue which is issued to the existing shareholders and in their existing shareholdings proportion, but no amount is going to be taken from them by issuing these shares. मरियम, बोनस इशू ऐसी काइंड ऑफ शेयर इशू है जो कि एग्जिस्टिंग शेयर होल्डर्स को इशू किया जाएगा इन द प्रोपोर्शन ऑफ देयर एग्जिस्टिंग शेयर होल्डिंग्स, लेकिन उनसे कोई पैसे नहीं लिए जाएंगे इन शेयर्स को इशू करने के लिए. So what is going to happen? The number of the shares which the shareholders are having in the company are going to be increased, but the share capital of the company is not going to be increased. Yes, dear?
How to put in shares can be issued.
In the same manner. Total number of shares are going to be increased. Number of shares are going to be increased. The amount of capital you are
Asking the total number of shares, how it is calculated.
in the same way as the right issues. Say, for example, 1 for 5, in proportion for every 5 existing shareholders, 1 new bonus issue is being issued. In the same manner, the shares which are being issued are going to be calculated. Now, what amounts are we going to write in front of the accounting entries then? The companies are going to use their reserves in order to finance these bonus issues. The reserves of the company are going to be reduced and the amount will be written in the share capital. So it's just going to be the changing of the place under the heads of the equity. Company is going to reduce its reserves and then it will be shifting the amount to the share capital. So for so many policies, for so many intentions of the directors, the bonus issue can be made. The characteristics of the bonus issue, I repeat, they are going to be issued to the existing shareholders in the proportion of their existing shareholdings, but no cash is going to be received from the existing shareholders. Now, the second important thing regarding bonus issue. Bonus issue is always going to be made at the nominal value. The accounting entry regarding bonus issue will always be going to be taken from the reserves. Debit will be reserves, credit will be share capital. No cash is coming, we cannot debit cash. We are taking the amount from the reserve, decrease in reserve, decrease in equity, debit. We are increasing the share capital, we are increasing the equity, credit, share capital. So in case of the bonus issue, the accounting entry will be debit reserves, credit, share capital. These are going to be the differences. Let's read what your book says. A bonus issue is the issue of new shares to the existing shareholders in proportion to their existing shareholding. No cash is received from making a bonus issue of shares. The advantages are issued share capital is divided into a larger number of shares, thus making the market value of each one less and so more marketable. When the number of shares are increasing and the value is the same, it means that the amount per share is going to decrease. When your denominator is increasing now, it means that now the external persons, external investors can easily purchase the shares of the company. The market value of the shares is going to become lesser now. The other advantage, issued share capital is brought more into line with assets employed in the company by reducing stated reserves and increasing share capital. So it's an attempt by the directors to reduce reserves and to increase share capital. Bonus issue is going to be financed out of the existing reserves of the company, retained earnings, share premium, and then revaluation surplus. The priority has to be given to the retained earnings. Once retained earning is going to be expired, then share premium. Then if it is going to be expired, then we are going to use revaluation surplus. So in priority, we are going to consume the reserves. Then they say the disadvantages are the administration cost of making the bonus issue. This can be the only disadvantage of the bonus issue. Obviously, some of the administration costs are going to be involved. As no cash is received from the bonus issue, the issue must be funded from the reserves. Any reserve can be used, though a non-distributable reserve, such as the share premium account, would be used in preference to the reserves, which can be distributed. So students, we are going to give the priority to the non-distributable reserves first. Priority will be given to the retained earnings. If all of your non-distributable reserves are going to be expired, then your distributable reserves retained earning is going to come in line. So first your accounting entry will be share premium, debit, credit, share capital. If you see that share premium is lesser than the amount of the bonus issue, then you are going to consume revaluation surplus, then you can consume retained earnings. So in priority, you have to use that. Understanding number 3, students. The requirement of the question is what are the balances on the share capital and share premium accounts of GKL company after this transaction? GKL company, a limited liability company, currently has 20,050 cents shares in issue, each issued at 1.25. Currently, it has how many shares? 20,000 shares. And the price of the share, the par value of the shares is 50 cents. That is $0.5. Issue price of these shares have been $1.25. It means that students, in share capital, how much existing balance has been there? In share capital, how much existing balance has been there? 20,000 multiplied by 50 cents. 10,000 in share capital has been already present. In share premium also there has been an amount already present because the price of the shares, issue price of the shares was above than the par value. How much above than the par value? Issue price is 1.25 and the par value is 50 cents. So it's 0.75 above than the par value. So 0.75 multiplied by 20,000, how much it is, students? Sorry? 50,000? 15,000. Okay. 15,000 we have in share premium. These were the existing balances. Again, we are going to read this statement. GKL company, a limited liability company, currently has 20,050 cents shares in issue, each issued for $1.25, and makes a 1-for-4 bonus issue. Now, after this, it has made 1-for-4 bonus issue. It means that for every 4 existing shares, 1 bonus issue has been made. Existing shares are how much? 20,000. So bonus shares are how much? 5,000 bonus shares. Got it? Bonus issue capitalizing the share premium account. In this bonus issue, which reserve is being used? Share premium account. What accounting entry we must have passed? Debit, share premium account, and credit, share capital account. Always the nominal value is going to be used. 5,000 multiplied by nominal value is $0.5. It means that 2,500 is going to be taken from the share premium. Is it? 2,500 is going to be taken from the share premium. It means that your balance on the share premium is going to be reduced by 2,500 and your share capital is going to be increased by 2,500. Got it? Your share capital is going to be increased by 2,500. So 12,500 will be present in your share capital and 12,500 will be present in your share premium account. Got it? Bonus issue will always be made on the nominal value. This is the key again. Decrease in reserve, debit. Increase in capital, credit. Whenever the reserve is going to be decreased, because it's a kind of an equity, decrease in equity, debit. Increase in equity, credit. Share premium is reducing, share capital is increasing. So what we have actually done in the case of the bonus issues, we are just changing the places, taking the amount out of the reserves and taking them to the share capital. Have a look at this question. Online students, let me just send the picture to you. So now, have you found that how are we going to calculate the number of the shares? In the same way as the right issue, we are going to calculate. Mariam, समझ आया?
जी मैम, थोड़ा समझ में आया.
Okay. Aisha and Rabia, are you cleared?
Yes, ma'am.
Yes, ma'am.
Good, good. Students, is it clear? May I erase it? Yes, Samia? Afa? Okay, now understanding number 4 is there. What are the balances on the share capital and share premium accounts of RIT company at 31st December 2006? This question is having the concept of right and bonus issue both. Can you please try this question, students, by yourself? And ultimately, you have to write the balances on the share capital and share premium account. My online students also, please try this question. Students in exam, do not make guesses. Whatever you are doing, please write it in writing. Please do write it first and then solve the question. Like we do try to keep the things in our mind and then we do try to do the other calculation so that we can reach at the final answer. Do not do this mistake. Whatever is being guided, do write it and then solve the question and then you see the options. Do see the options in the last after calculating your answers. Read the requirement first, then read the scenario. After calculating, then see the options.
Ma'am,
Yes, dear.
this 25C will change into 0.5 or 2.5?
No, 0.25.
Okay,
25 divided by 100.
okay, ma'am.
0.25. Yes, students, have you finished? Hizar, have you finished? No?
Yes,
Didn't get-
ma'am.
Okay. Samiha, have you finished? Not got it? Not got it? Okay. I have written this so that you can compare your answers with this. Students, they say RIT company is a limited liability company with 200,025 shares in issue. Already shares in issue are 200,000. The amount for which we are going to write in the share capital are number of shares multiplied by the nominal value. 200,000 multiplied by 0.25 will be 50,000. Got it? They say at 1st January, the balance on the share premium account was 75,000. At that time, the amount of the balance on the share premium account has been 75,000. So initial balances we have written. The following transactions occur during the year ended 31st December 2006. 31st January, there was a fully taken up 245 right issue. 245 right issue has been made. Existing shares were 200,000. 245 means multiplied by 2 divided by 5. 80,000 right shares have been issued. In front of share capital, number of shares 80,000 multiplied by the nominal value is going to be written. What has been the nominal value? 0.25. In front of share premium, the price over and above the par value has to be written. Number of right issue has been 80,000. The price over and above the right above the par value has been difference between 1.8 and 0.25. How much it is, students? 1.8 minus 0.25. Calculate. 1.8 minus 0.25. 1.55. So 1.55 multiplied by 80,000 will be written in the share premium. This is a price which is being taken over and above the par value. Got it? Then they say 12th August, there was 1/10 bonus issue made using the share premium account. Then they have made the bonus issue, that is 1/10. The previous shares were 280,000. For those 1/10 bonus issue is being made, 1 multiplied by 1 divided by 10. 28,000 bonus shares have been made. Bonus issue is always going to be made at the nominal value. It means that 28,000 multiplied by nominal value is 0.25. From share capital, we are going to add it. In share premium account, we are going to deduct. Because bonus issue is using share premium account. So now you can calculate the balances. 77,000 is on share capital account and share premium. 75,000 plus 124,000 minus 7,000. It's 192,000. Clear now? My online students, I'm sending you the picture.
Okay, ma'am. Thank you.
Okay, Rabia, I have just seen your message here. No, Rabia, the amounts which you have written are wrong. Now I hope that you are clear. I'm sending the picture as well. Please have
Yes,
a look.
ma'am. Thank you.
You're welcome. Okay, now students, we can have a break. After break, we are going to finish our lecture and then we are going to have the test in the last 35 to 40 minutes. Okay. Okay, my online students.
Okay,
Yes,
ma'am.
ma'am. Okay, thank you.
Okay, see you after the break then. 25 minutes break we are. Students, first we are going to finish our lecture, then we are going to have a test. Okay. So we did this understanding before to the break. Now we are going to move forward. Students, the next concept under finance cost, under capital structure in the finance cost is regarding dividends. As I told you that dividend is the cost of servicing the equity financing. The return which the companies do have to give to the equity shareholders on the shares which they have purchased is known as dividend. Dividend can be of two types: interim dividend and final dividend. Interim dividend is the amount of the dividend which has been given to the shareholders during a year. During a year, if some dividend has been paid to the shareholders, this kind of dividend is known as an interim dividend. Interim dividend has to be reported in our statement of changes in equity. On the other hand, we do have a final dividend. A final dividend is an amount of the dividend which has been paid at the year end to the shareholders of the company. Like interim dividend, final dividend is also going to be shown in our statement of changes in equity. The only place where dividends are going to be shown in our financial statements is statement of changes in equity. At no other place they are going to be shown. One more thing about which you have to be careful is that dividend is proposed by the directors of the company and it has then to be finalized. The dividend is going to be proposed and then it has to be finalized. When the dividend is proposed, it does not mean that it is going to be finalized also. So when in the questions they do tell you that this amount of the dividend has been proposed, it does not mean that it is actually the amount of the dividend which has been paid. When they are going to tell you that this is the amount of the final dividend proposed and accepted by the shareholders and it is paid, then you are going to make an accounting entry regarding that dividend. The accounting entry regarding dividend is debit retained earnings, credit bank account. Because the reserve which we are going to use in order to pay the dividends to the shareholders is retained earnings. So we are going to debit retained earnings as decrease in the reserves. Decrease in reserve, debit, credit is going to be cash or bank since asset of the organization is decreasing. So the accounting entry for payment of the dividend, either interim or the final one, the accounting entry is going to remain the same, that is debit retained earnings, credit bank account. Let's quickly read it, what they say. They say dividends represent the distribution of profits to shareholders. One more thing which you have to keep in mind, that dividends are going to be calculated on the nominal value of the shares. The value of the share capital which we show under the head of the equity in our SOFP, on that particular amount, our dividend is going to be calculated. Let's read. Dividend represents the distribution of profits to shareholders. They are usually expressed as an amount per share, that is 10 cents per share or 10% of the nominal value. Dividends on the preference shares are usually based on the predetermined amount, such as 5% of the nominal value of the shareholding. Ordinary dividends. A company may pay a mid-year or interim dividend. The double entry is debit retained earnings, credit bank. At the end of the year, companies may propose or declare a dividend to the ordinary shareholders. That is, tell the shareholders the amount of the dividend to be paid after the year end. This is final dividend. These dividends have to be approved at the annual general meeting. And until this point, the company has no obligation to pay them. Therefore, proposed dividends at the end of the year that have not been approved by the shareholders cannot be recorded as liabilities at the year end. मरियम, dividend वो अमाउंट है जो कि हम लोग ऑर्डिनरी शेयर होल्डर्स को पे करेंगे एज अ रिटर्न टू देयर शेयर्स. जब भी डिविडेंड पे किया जाएगा, अकाउंटिंग एंट्री रहेगी डेबिट रिटेन्ड अर्निंग्स, क्रेडिट बैंक. डिविडेंड्स हम लोग शो करते हैं सिर्फ और सिर्फ एक ही फाइनेंशियल स्टेटमेंट में, जो कि है स्टेटमेंट ऑफ चेंजेस इन इक्विटी. डिविडेंड की अमाउंट कभी भी स्टेटमेंट ऑफ प्रॉफिट और लॉस के अंदर नहीं आएगी. इंटरिम डिविडेंड वो डिविडेंड है जो कि ड्यूरिंग द ईयर शेयर होल्डर्स को पे किया जाता है। फाइनल डिविडेंड वो डिविडेंड है जो कि ईयर एंड पर शेयर होल्डर्स को पे किया जाता है। अगर आपके एग्जाम में प्रोपोज डिविडेंड का नाम लिया जाएगा, वो तब तक लाइबिलिटी नहीं बनेगा कंपनी के लिए जब तक कि वो एक्चुअली अप्रूव एजीएम में नहीं हुआ। Once it is going to be approved in annual general meeting, then it will become the liability of the company. Then students, we have loan stock or loan notes as well. It's a kind of the debt financing in the company. Like any other kind of the debt financing, we are going to treat the loan stock or loan notes as well. The characteristics of the loan stock are similar to that of the loan notes or debt financing. The nominal, the major face value of the loan stock or loan notes is $100. If nothing is mentioned about the nominal value of the loan stock, you are going to consider it as $100. The amount of the interest which is being paid on these loan notes is fixed at the time of the issue, and it is going to be present on the note itself. Say, for example, 10%. It is again going to be calculated on the face value of the loan note. The other characteristics are same as any other kind of the debt financing. They say the limited company can raise funds by issuing loan notes. These are fixed term loans. The term loan note simply refers to the document that is evidence of the debt, often a certificate that is issued to the lender. Similar to the shares, the loan note will have a set nominal value that is $100. Individuals or organizations can buy the loan notes at an agreed price. The life of the loan note will be fixed, and the company issuing them will have to pay the loan note holder back at an agreed point in time. The issuer will also have to pay interest to the loan note holder. The interest will be calculated based on the nominal value of the loan note. The interest incurred is included in finance cost in the statement of profit or loss. Students, when the finance costs are going to be paid in the form of cash, what accounting entry we are going to pass? Interest is an expense, debit, interest expense, credit, cash. Sometimes at the end of the year, the interest has become our expense, but we have not yet paid in the form of cash. Over there, we are going to follow the accruals concept, which means that our accrued interest is going to arise if our interest expense has incurred, but we have not yet paid it in the form of the cash. So in that case, we are going to debit interest expense and we are going to credit accrued interest expense. So similar laws we are going to follow, which we have discussed earlier also. Interest is an expense like any other kinds of the expense. So if we are paying it in the form of cash, debit interest expense, credit cash. If expense has incurred, but we have not yet paid it, debit interest expense, credit accrued interest expense. Interest expense, like any other kind of the interest, will be coming in the statement of profit or loss, which is the only place for interest expense. It is statement of profit or loss. On the other hand, any kind of accrued interest or prepaid interest as our liability and our asset can come in the statement of financial position as well as statement of profit or loss. Accounting entries they are mentioning over here. When finance is first received, the company receiving the finance must recognize the obligation to repay the loan holder as follows. When the company is going to receive the loan for the first time, obviously cash is coming in the organization, so it is going to debit cash. Because liability is increasing in the organization, that is why it has to credit non-current liability. So debit cash, credit non-current liability when the company is going to issue the loan notes for the first time. It's a similar accounting entry as we do gain any kind of loan in the organization. Debit cash, credit loan, or debit cash, credit non-current liability. The loan has to be repaid after the period of 12 months. They say every year the business should recognize a finance charge based upon the terms of the agreement as follows: debit finance charges or interest expenses, and credit cash if it has been paid in the form of cash, or current liabilities if the interest expense has been incurred but not yet paid in the form of cash. मरियम, जब भी इंटरेस्ट एक्सपेंस हम लोग कैश के अंदर पे कर देंगे, अकाउंटिंग एंट्री होगी डेबिट इंटरेस्ट एक्सपेंस एंड क्रेडिट कैश. अगर साल के एंड पर हम लोग देखते हैं इंटरेस्ट
Ma'am, your
एक्सपेंस,
voice disconnected.
voices. Aisha and Rabia, are you able to hear me?
Yes, ma'am.
Mariam, you have to re-enter.
Now it's fine, ma'am. It was disconnected for a while, but now it's fine.
जब ऑर्गेनाइजेशन मरियम लेगी जो कि है लोन, उस टाइम पर वो अकाउंटिंग एंट्री पास करेगी डेबिट कैश क्रेडिट नॉन करंट लायबिलिटी, या फिर डेबिट कैश क्रेडिट लोन. जब फाइनेंस चार्ज इन द फॉर्म ऑफ कैश पे होगा तो उस टाइम अकाउंटिंग एंट्री होगी डेबिट फाइनेंस चार्ज या इंटरेस्ट एक्सपेंस क्रेडिट कैश. अगर साल के एंड के ऊपर इंटरेस्ट इनकम हो गया है लेकिन अभी तक वो इन द फॉर्म ऑफ कैश पे नहीं किया गया, तो उस सूरत हाल में डेबिट इंटरेस्ट एक्सपेंस क्रेडिट एक्रूड एक्सपेंस या फिर डेबिट फाइनेंस चार्ज क्रेडिट करंट लायबिलिटीज. Understanding number 5 is there, students. Let's have a look at this. What accounting entries are required in the year ended 31st December 2005? Show relevant extracts from the statement of financial position. Custard Creameries is an incorporated business which needs to raise funds to purchase plant and machinery. On 1st March 2005, it issues 150,000 10% loan notes, redeemable in 10 years time. Students, it means that the amount of the loan which has been taken is 150,000. The amount of the interest which is fixed at the time of the issuance is 10 years. And this amount of the loan has to be redeemed, has to be returned after 10 years. When this transaction is occurred on 1st March 2005, what accounting entry we must have passed? Debit, cash account. How much amount have we taken? 150,000. And credit, non-current liability. That is 115,000. Redeemable in 10 years time. Interest is payable half yearly at the end of the August and February. Students, interest can be paid on monthly basis, on quarterly basis, on half yearly basis or semi-annually basis, or annually as well. So any of the condition can be given to you in the exam. Interest is payable half yearly at the end of the August and February. Now, your year ending date is 31st December 2005. It means that your year starting date is 1st January 2005. You can see that the interest has to be paid in August and in February. When you have taken a loan in March, the first due date for the interest, August, is going to be coming in between your year starting and year ending date. It means that when you are going to reach 30th August, because at the end of the August it is 30th August 2005, you have paid this interest in the form of cash, is it? You must have passed an accounting entry as debit, finance charges or interest expense, and credit, cash account. How much interest? On 150,000, how much interest is there? 10% interest is there. Because it is half yearly, it means that it's 6 multiplied by 6 divided by 12. Got it? How much it will be, students? Calculate. 7,500.
Yes, ma'am.
7,500 is going to be paid in the form of cash. But the second due date for the interest has been February, which is not going to come in between your year starting and your year ending date. It's February 2006 because loan has been taken in 2005. So February 2006 will be coming after your year ending date, but your accounts have to be ended in 31st December 2005. When you will be reaching 31st December 2005, what you have to do? you have to see that how much expense has been incurred in this year and it has not been paid in the form of cash. Obviously, September, October, November, December, 4 months interest expense has been incurred but not yet paid in the form of cash when you reach 31st December 2005. So you have to pass an adjusting entry regarding accruals at this time. You are going to debit. What are you going to debit, students? Finance charges are going to be debited. Debit is going to be finance charges or interest expense. And credit is going to be current liability, which is accrued expense. Got it? Same type of accounting entry it is. Debit expense, credit accrued expense. Okay, make it simple. The previous one which we used to pass, debit, interest expense. But please consider that finance charges and interest expense are the same. Debit, interest expense and credit will be accrued expense account. How much interest is being accrued? 150,000 multiplied by interest has been 10%. For how many months it has incurred but not yet paid? September, October, November, December. Multiplied by 4 divided by 12 is accrued. Okay. Which accounting entry we are going to pass, students? Which amount is going to be there? Calculate. 5,000 is accrued. Now, in your SOFP, they have asked us for the SOFP. In your SOFP, what we are going to show under the head of liabilities. Non-current liabilities are going to be shown as the loan. Loan amount of long-term loan is there, 150,000. Then we have to show current liability, that is accrued expense, accrued interest expense, that is 5,000. This is what we are going to show in our statement of financial position. Brilliant. So this concept has been the same as per our accruals and prepayments chapter. My online students, I am sending you the picture.
Thank you, ma'am.
You're welcome, dear. Okay, now students, with this, we are ending our lecture for today. And this is the time for the test. Online students, I am sending you the document on WhatsApp. You have to see that, and from there you have to attempt the test. Okay?
Yes, ma'am. Thank you.
You're welcome.
Okay, ma'am.
Yes.